video, and I'm going live every single day from Monday through Friday at 11 a.m. Eastern Time. I am taking off tomorrow. Tomorrow is the 4th of July, so if you're watching this on Thursday, I'm taking off tomorrow, so I'm not going live. So in this video, I'm going to continue where I left off yesterday. I'm going to be talking about how to start private money lending in 2025. This is a step-by-step guide. If you missed yesterday's video, definitely recommend check yesterday's video because that was part one. I went over understanding the basics, defining your lending criteria, establishing a legal entity, creating loan documents, and building your capital base. And so today I'm going to pick up where I left off, and I'm going to talk about finding qualified borrowers, underwriting the deal thoroughly, securing your loan with real estate, managing the loan actively, and documenting your track record. So that's what I'm going to be talking about in this video. If you are interested in learning more about private money lending, this is the place to be. You are in the right spot. I spent the last 2 years teaching people how to start a bookkeeping business. Hopefully you watched those videos. Hopefully you've learned. Hopefully you've been following along on my journey. And now hopefully you've got $5, $10, $15, $25,000 saved up. And so maybe I can teach you how to do private money lending. I will be honest with you. I'm not feeling great today. I'll just be honest, not feeling great. I usually try to be positive, optimistic, and bubbly and excited, but today just not feeling it. So I might cut this short. Who knows? We'll see what happens. If you have any questions or comments, let me know in the chat. I'd be happy to answer your questions. I'd be happy to reply to your comments. But if you notice that my mood is just a little bit off, I apologize, just not feeling great. It's a combo of things. It's a mixture of things. I think I'm just tired in general from just working hard. That's the thing about starting a business, growing a business, entrepreneurship, climbing the corporate ladder, whatever you're doing, it's not easy. Don't ever let anybody convince you that it's going to be easy because it's not. It's just simply not going to be easy. That doesn't mean it can still be rewarding. It can still be satisfying, but it's not going to be easy. If it were easy, everybody would be doing it, and it's not that much fun. So it's hard. It's hard to grow something, to start something, to climb, to advance, to get promoted. It's not easy. So if you're struggling, hey, maybe this is the video you needed to see. Maybe it's kind of nice to see a realistic perspective. It's not always the highlight reel. In fact, the majority of the time, it's the exact opposite. Usually we're struggling, if I'm being honest. Like usually things are hard. Usually we're struggling, we're grinding, we're working, we're overcoming obstacles. It's only sometimes that things are going really, really good. It's not always like that. Okay, I'm not throwing a pity party. Let me be clear. Like, I appreciate your sympathy, but I'm not throwing a pity party. I'm going to be fine, but I'm just being honest. I'm just being transparent, genuine, and realistic. Okay, anyway, let's talk about it. Private money lending in 2025. This is a journal for me. These live videos, I'm excited to keep doing this. I'm struggling. I don't want to keep doing these videos, I'll be honest, but I think it'll be cool to document this journey. So I'm trying to raise $5 million in Zip Capital. Right now I've got 358,000 and I'm trying to raise 5 million. I've got about 1.3 million of my own money and Harrisburg bookkeeping money invested in private money loans. And then I've got almost 400,000 of other people's money. So if you want to try private money lending, you can. Let's talk about it right now. Let's get into it. But if you want to invest into my fund, you also can do that. Take more of a passive investment route, or you can take more of an active investment route. All right, let's talk about it. Let's stop blabbering. Step number 6, find qualified borrowers. So this is kind of how it happened. It all happened by accident, if I'm being honest. I started doing bookkeeping for real estate investors, and then I just started talking to these guys, and I saw their books and I saw their financial reports. I saw their acquisitions and their investments and their flips, and I realized that they were borrowing money from people. And so I figured, hey, what the heck? How about I try this? I saved up $50,000 and I did a private money loan with one of my bookkeeping clients. So finding qualified borrowers in the beginning, really simple. You probably don't have a ton of money. Maybe you do. Maybe you have 100,000, maybe you have 1 million. But when doing real estate loans, even $2 million, from my experience, goes very fast. Even if you're doing small loans, even if you're doing $200,000 loans, $100,000 loans, which those are small real estate loans, even doing small real estate loans, your money still goes fast. So in the beginning, it's not necessarily hard to find qualified borrowers, but as you grow and maybe as you increase your rates, increase your prices, you might have to try a little bit harder to find qualified borrowers who are willing to pay your premium rates. So you've got a couple options. You can go to networking events. Real estate investors love networking events. You can leverage social media, Facebook, LinkedIn, Instagram. You can also work through referrals, connecting with realtors, other loan officers, title agents. There are a ton of real estate professionals who are already established in your area who might be able to give you some referrals. So maybe consider, instead of, like, definitely do your own marketing, but if that's not your thing, you don't have to do your own marketing. You can just build relationships with realtors because you already know they're doing a ton of marketing. They're already talking to real estate investors, especially if you're willing to do small loans. This can be a great niche for you because a lot of mortgage brokers refuse to touch anything less than 100,000. Like, that's their cutoff. If it's less than 100,000, they just quite simply won't even look at it. No matter what you're willing to pay, interest rate, origination fee, a lot of mortgage brokers won't even look at it if it's less than 100,000. So when you're trying to find qualified borrowers, don't just take the first person who comes across your desk. Focus on borrowers with experience. That'll be the best way for you to mitigate risk. And if they don't have experience, look for other ways that you can mitigate risk. Maybe they don't have experience as a real estate investor, but maybe they have adjacent experience. Maybe they're a realtor. Maybe they're own a remodeling company. Maybe they've been a general contractor for the past 15 years. So maybe they're going to manage the actual flipping of the house. Or maybe if they're a realtor, maybe they've got a ton of experience finding good deals. So focus on people who have experience, successfully have completed flips in the past, or try to find some people with adjacent experience. And if neither of those two things are true, then at the very least, look at their W-2 job. Look at their business tax returns, look at their pay stubs, make sure they have decent income. That way, in the event that things go south, you want to know that they have decently strong cash flow from their day job or their other business, so that in the event that things don't go well or don't go according to plan, they have a cushion, they have a buffer, they have some cash reserves or some cash flow from their job to fall back on in case the deal doesn't go exactly as planned. And then make sure that they understand their exit strategy. So if they're going to flip the property, make sure that they understand what the after rehab value of the property is. Make sure that they consult with the local realtor who can help them calculate the after rehab value. Make sure they connect with a general contractor to walk the property and give them an accurate scope of work for how much it's going to cost to rehab the property. Or if they're going to do a cash out refinance with a DSCR loan or a traditional mortgage, make sure they already have those connections with a local credit union or a mortgage broker. And if you are thinking about getting into private money lending, what an amazing opportunity. You should also be networking with mortgage brokers so that you can refer your private money lending borrowers over to them to do a cash out refi. Such an easy referral, such a great relationship. Hopefully it's a two-way referral street. Okay, so that's number 6, find qualified borrowers. And if you've been growing your bookkeeping business, this is already happening. You've already been networking with real estate investors and business owners and entrepreneurs on social media. So just tap into the marketing and the network that you already have. It should be a pretty seamless transition. And you really don't have to try too hard, because if you only have 25 or 50,000, you're only going to do one loan every 4 to 6 months. So talk about it for a couple of days, find a borrower, and then you don't bring it up again for 4 to 6 months. So it's really pretty simple to find qualified borrowers. Number 7. So once you establish underwriting criteria, once you have the money, once you find the borrower, now you have to actually underwrite the deal thoroughly. So there's a long list of things that you could do. If you've ever gone through a mortgage application yourself, then maybe you could kind of piggyback off of what the mortgage broker or the loan officer at your local credit union already did. So that's kind of what I did. I took notes and I noticed how my loan officer collected documents and what documents they asked for, what questions they were asking. So specifically, two most recent tax returns, two most recent bank statements, pay stub if they're an employee, financial reports if they're an entrepreneur, P&L, balance sheet, and then the investor's experience, two most recent HUDs from their acquisition and their disposition. I don't review the borrower's credit. I don't do an appraisal, but you could do that. Absolutely. You could do a soft pull on their credit. You could do a hard pull on their credit. Just, I don't really know all the details behind that. I'm sure there's some things you need to get in order to be able to do that. And then appraisals cost 200, maybe 400, maybe like $200 to $600 for an appraisal. That's not a bad idea, especially if you're in an unknown market, or if it's in an unusual building, like a mixed use building and not just a traditional single family home. Maybe getting an appraisal, not a bad idea. The borrower's going to pay for all of it. The borrower's going to pay for the appraisal. The borrower's going to pay for the credit check. Liquidity, how much cash do they have in the bank account? So that this can be a firm underwriting criteria for you. Maybe if it's a brand new investor, you want to see, I don't know, maybe 20% of the purchase price. I want to see that they have that liquid in their bank account. 20% of the purchase price, maybe more, who knows? Maybe you just have a flat, I want to see they have 50,000 liquid, no matter what. I don't care what the project is. I just want to see they have 50,000 liquid or more. And then you're going to judge that based on that. Don't just take their word for it. Of course, ask questions during the application process, but don't just take their word for it. Look at bank statements, look at brokerage accounts, look at whatever you have to look at to judge the liquidity of the borrower. And then the rehab plan. Make sure you're looking at the scope of work, the renovation plan, the rehab budget. Make sure that it makes sense. First of all, make sure that they have one, of course, but also make sure that it makes sense. Look at the interior, exterior pictures of the property and make sure that the rehab budget is in line with what you're seeing. If the house needs totally gutted and they don't have, I don't know, maybe they don't have framing and drywall on the rehab budget, that's probably a red flag. Maybe it just needs some cosmetic stuff. Maybe it just needs $10,000 of rehab. Maybe they're just going to do a fresh coat of paint and replace the carpet upstairs, and that's it. Look at the interior, exterior pictures. If the roof has a hole in it and the rehab budget's only $10,000, probably not realistic. So use your best judgment. I'm not a general contractor. I'm not a realtor. I'm not an expert by any means, but you can use some common sense. You can pick up what they're trying to put down. You can tell if they're trying to get one over on you, or you can tell if they have, just ask a ton of questions. Like you are basically doing a job interview at this point. So if you don't know something, just ask for clarification. Ask to hop on a phone call. Ask to see the property. Ask to walk the property. Ask them to come to your office for an in-person interview. Don't rush through the underwriting process. Ask questions, and it is up to them to answer the questions. They are the ones who want the money. If they want the money, and if they're serious, they'll answer your questions. You should not be bending over backwards to collect this information, especially not in the beginning. Loan officers, mortgage brokers who are managing 10 loans a week, yes, that's a little bit different because they're just plain middleman. They're just the loan originator. They're just the mortgage broker. They're just trying to collect these documents and they're just getting a commission on the loans. So that's a little bit different. But for you, if you, especially if you have less than $100,000, do not work with borrowers who are not organized. There's no reason to. You can be unbelievably picky and selective with who you decide to lend to. And you might as well in the beginning. If you've got less than $500,000, you can still be unbelievably picky with who you work with. So take the underwriting process very seriously. That's what I do. At Zip Capital, I take the underwriting process very seriously because I'm only managing $2 million. So that money goes quickly. And so I cannot afford to onboard a bad borrower or onboard a borrower who's not going to pay me back. So I take underwriting risk mitigation very seriously, only managing $2 million. I take my time when I'm underwriting these loans. Okay, step number 8, secure your loan with real estate. I recommend only fund deals with a first lien mortgage. There's really no need to do, there's definitely no need to do unsecured loans. There's really not a need to do second position mortgages unless you really want to, unless you really trust the borrower, or unless you have less than $50,000. If you don't have enough money to fund a first position acquisition, then you might have to do a second position mortgage. But either way, make sure you have a real estate attorney, draft your mortgage and your promissory note and your personal guarantee. Make sure you have the title agent with the documents, a trusted title agent. Make sure that they get the documents notarized, make sure they mail you the original copies, and make sure they record the mortgage. That's the most important part. You want a recorded mortgage, and you can look this stuff up online. You can go to your county website and you can look to see if they recorded the mortgage. It's not going to happen same day instantaneously, but 3, 4, 5 days after closing, check the county website. Make sure your mortgage is recorded. Property insurance. Make sure you are listed as loss payee or additionally insured on the property insurance. Make sure you get a declarations page before closing. Force your borrower to send you a declarations page for the property insurance before closing. That's the key. After closing, you lose a lot of leverage. But hey, I can't send the wire until you send me this declarations page. Company policy. That's my policy. And then if they are serious about it, they'll send it to you. Okay, 2 more. Manage the loan actively. And then the last one is just document your track record. So rehab. I talked about this in the last video. If you have rehab, sometimes you can fund rehab upfront. So this gets a little bit more complicated, but let's just make an example. Let's say there's a property for sale for $100,000. And this particular borrower has a general contractor walk the property, and he thinks it's going to be a $50,000 rehab. So in this example, they need $150,000 to flip this property. Some real estate investors will pay for rehab out of their own pocket, so they don't need 50 grand. Other real estate investors don't like to use their own cash, so they might ask for $150,000, 100 up front at closing, and then 50,000 for rehab. The key here is that I have a couple things. So the loan is for 150,000, but then there's a rehab draw of 50,000. So if you look at the HUD, you want to make sure the title agent puts both of these on the HUD. The loan amount is 150,000, but the rehab draw is 50,000. And then you want to make sure that you have a draw agreement. So whatever that looks like for you, just make sure you clearly outline the draw agreement. For me, I do 1/3 after 1/3 of the rehab is complete, the second draw after 2/3 of the rehab is complete, and then the third and final draw, I hold it. And I'm actually going to open up an actual draw agreement, and I'm going to tell you exactly what I put in my draw agreement, because I think this is so important. So I did not do this for like the first 35 loans that I did. I just recently put this into the language of my draw agreement. So let me pull it up here real quick for you. And let me just tell you what it says. Draw number 3. If you are holding the property as a rental, the final rehab draw will only be dispersed once all construction is fully complete and the property is either actively listed for rent under a signed lease agreement or has completed a refinance appraisal. If you are selling the property, the final draw will only be released once all construction is fully complete and it is listed for sale on the MLS or under a signed sales agreement. So that was kind of lengthy. Definitely recommend write that down if you plan on having a draw agreement. But there's 2 different things going on here. If they are going to sell the property or hold the property. If they're going to sell the property, then it's pretty obvious. It just needs to be listed on the MLS. If they're going to hold the property, it's a little bit more complicated. So either way, the construction has to be complete. And if they're going to hold the property, then it needs to be either actively listed for rent, which was probably going to be on Zillow or apartments.com. I usually tell my borrower, send me the link. Send me the link where it's listed on the MLS, either for sale or for rent on Zillow. Or there's a signed lease agreement, or there's already been an appraisal done for the refinance. So that's the third and final draw. And so I manage these draws. So I require pictures. Send me pictures. And if the pictures aren't clear, send me words. Send me an explanation. Why do you deserve this first draw? So once again, you have all the leverage. So don't be afraid to ask questions. Don't be afraid to ask for clarification. If you're not satisfied, like, tell the borrower, hey, here's your scope of work. Show me exactly why you think you are 35% of the way done with this rehab. Like, force the borrower to do his job. Force the borrower to make you feel comfortable about giving him an extra $20,000. Like, this is serious stuff. It shouldn't just be a quick text message and like one picture of the kitchen, and then you say, yep, good to go. Here's your $20,000. It needs to be more professional and more thorough than just simply that. A lot of people will walk through the property before they release a draw. Okay. Track payments, collect monthly interest. Oh, last thing with the draw. So if in that example, $150,000, $100,000 purchase, I hold on to that $50,000. First, I charge them interest and origination fee on the whole $150,000. But second, for that $50,000, you have to hold that $50,000. You have to be responsible enough to hold $50,000 in your bank account and not lose it, because it's theirs. You owe it to them. So just because you're holding it, it's not really yours anymore. Like, you owe it to the borrower. So if they request the draw and you don't have it, that's a really big problem. So you as the lender need to be financially responsible enough to keep this money. You're earning 12% interest on this money. So you need to keep it, and you need to have it available for them. Collecting monthly interest. I've already explained this a couple times before, but I have ACH origination set up on my bank. So people don't send me the monthly interest payments. I get their bank information. I have an ACH authorization. I collect their monthly interest payments. Stay in communication with the borrower throughout the project. Check in with the borrower. Ask for status updates. Call the borrower. Say, hey, like, I want to come see the property. Send me pictures. How's everything going? I would recommend check in with your borrower monthly. Just a quick text message, a quick email. It doesn't have to be an hour-long meeting. It can just be a quick email, just like, hey, what's going on? How's everything going? What's the status? Are we still on track? Okay, last step here. Let me get to the questions real quick first. Let's see. Do you think there will ever be a time where you have more money to lend than actual lenders, or is there so much demand that it's not likely? KLC, I don't know, to be honest. I don't know. It hasn't happened to me yet, but this is the most money I've ever had. I've never had more than $2 million, and that goes fast in real estate loans. So I don't know. Maybe it will. It's simple economics. If I have too much money, I would decrease my rates. I could lend my money all day at 12% and 1% origination. So if I absolutely had to, I could do 13% and 1% origination. So if I absolutely had to, I could lend my money out at 13 and 1 for 6 months, and then do it again, 13 and 1 for 6 months. So I can make 15% annual if I absolutely had to. And so I'm paying my borrowers about 9% right now. Yeah, I'm paying my investors not like 8 to 9%. So the cutoff for Zip Capital to earn 10% is 500,000. So none of my investors have more than 500,000 invested into Zip Capital. Obviously, I only have 400,000. So I'm paying all of them 8 or 9%. So at worst case scenario, right now I can make 15% on my cash. So if I'm paying 8 or 9%, I could easily deploy my capital and make 15%. So I'm not really too worried about not having enough loans. Do you ever deal with depreciation as a bookkeeper, or do you leave that to the CPA? I leave that to the CPA. KLC, how do interest rates impact lending rates? And how does the housing market, bullish, bearish, impact lending demand? So from what I've seen, I've been working with real estate investors for the past 5 years. And even during COVID, when interest rates were really low, private money was still at around 10% interest rates. So I don't think that private money real estate loans are necessarily tied to mortgage rates like that, because these guys cannot get a mortgage. Like, you cannot get a loan from a bank for a fix and flip. It's just, you just can't do it. Banks won't do it, at least from what I've seen. So these guys don't really have another option. Like, they have to come to us as private money lenders. Housing market, bullish, bearish. So the housing market is tricky. It's almost like looking at the stock market and saying like, oh, the stock market is crashing, but imagine if you're only invested in 2 or 3 companies. It doesn't really matter what the S&P 500 is doing if you're only invested in 2 or 3 companies. So for me as a private money lender, I'm only lending to a dozen real estate investors in central Pennsylvania. So if you look at the housing market, what's happening to the nationwide housing market doesn't really affect me or my 10 borrowers, because we are such a small microcosm of the total housing market. Even if you look at the total housing market in central PA, like, I'm only lending on 10 properties in central PA. And so to be honest, I do not care about the housing market. I don't. It's out of my control. It's going to fluctuate no matter what. It's going to go up and down. Things are going to happen. I don't care about the housing market. I don't care about interest rates because I can't control them. I only care about and maybe I'm naive. Maybe that's a foolish perspective. What I do care about is what I can control. And I can control my underwriting criteria, my communication, my due diligence, my, like, who I lend to. Like, those are the things that I can control. And so that's what I focus on. I look at tax returns and bank statements. I review pictures and scopes of work and comps. That, like, my comps that I look at are in the past 3 to 6 months. So I am constantly evaluating these properties in real time. I'm constantly looking at the market in real time. I'm looking at properties that have sold in the same school district, same zip code, same city block in the last 3 to 6 months. Let's see. How do you make time for meaningful relationships with your wife and family while putting in long hours to grow the business? Has that ever been a challenge for you? So my wife does an amazing job at managing the house and managing the kids, and we have a full-time nanny. So that helps a lot. That helps with the workload, and that enables me to put in long hours. In order for me to get quality time with my family, I simply make sacrifices elsewhere. So, for example, football Sunday. Like, I used to watch 12 hours of football on Sunday. I don't do that anymore. I go to the park with my kids. I go to church with my family. I maybe sometimes I'll do a couple hours of work on Sunday at 1 p.m. while my kids are napping, when I would love to maybe do work at 10 a.m. so that I can watch football at 12 p.m. But I don't do that because I've got kids, I've got a family. So I will make sacrifices elsewhere. I try to put my family and my business first, and then everything else is after that. So Friday night, like, I don't go out drinking with my friends. Friday night, I try to go to bed early so that I can wake up early on Saturday morning, get a couple hours of work done before the kids wake up so that we can go to the park as a family Saturday, 10 a.m. instead of going out with my friends Friday night, waking up hungover Saturday morning, and then trying to get some work done at 10 a.m. I don't do that. So that's kind of how I've been able to manage working a lot, working long hours, growing my business. And I've got 4 kids and I've got 1 kid on the way. So I've got my 5th kid going to be born here in September very soon. Okay, last question. How long do you plan on doing the weekly live streams? I have no idea. My goal is to continue doing this indefinitely, but we'll see. I'm sure I'm going to get burnt out. I'm sure I'm going to get tired at some point. So we'll see what happens. I don't know. But I'm not doing it tomorrow, but I'm gonna do it on Monday. So we're just gonna take it one day at a time. I'm gonna be here every day, 11 a.m. Eastern Standard Time. I'm gonna be talking about private money lending and Zip Capital. I'm gonna keep you guys updated on where we are, and that's it. So I hope you all have a wonderful 4th of July. Have a great weekend. Stay safe. Keep working hard. Never give up. And I will see you all on Monday.